Thank you for joining us today. We're going to discuss a little bit about the latest VA loan guidelines and loan amount limits for 2019. Homebuyers that have questions can visit us at vamortgagehub.com or simply call 1-800-691-8826 7 days a week. First and foremost, we'll discuss the VA purchase loan and the benefits of the VA purchase program. First and foremost, the program is available up to 100% financing with no down payment. VA remains one of the last programs available that still does permit 100% financing. Of course, there is no monthly mortgage insurance, or more commonly known as PMI, with VA loans. That is good for, on average, $100 to $150 a month savings for home buyers. Sellers can pay the buyer's closing costs, VA allowable closing cost, so that also reduces out-of-pocket expenses to the home buyer. VA loans, like all government-backed mortgages, FHA loans, USDA loans, and VA loans, they all offer secure 15, 30-year fixed rate, all the common fixed rate terms, with no prepayment penalty or early payoff clauses. Currently, the loan amount limits for the VA program range from $484,350 in most locations throughout the U.S. There are select high-cost locations that are located in parts of California, South Florida, the Northeast, maybe around D.C., Colorado, areas like that. There are select high-cost locations that allow VA loan limits, in some cases up to $726,525. There is also a VA jumbo or VA high balance program that does allow even for a greater loan amount, which we'll look at in the next slide. The VA jumbo loan, or some refer to it as maybe a high cost or VA high balance loan. These are available up to loan amounts to $1.5 million. Now, it's important to remember the VA jumbo program is not 100% financing. Basically, the borrower will need to put down 25% of any amount that they borrow that exceeds the conforming loan limit for their county. An example would be, let's say, a regular area that has a conforming and VA loan limit of $484,350, maybe like Houston, Texas. In an area like this, let's assume a home buyer wanted to purchase a house that was for $584,350. It was $100,000 greater. In this example, the borrower would need to put down $25,000, 25%, of that amount that exceeded the conforming loan limit cap. They exceeded the conforming loan limit cap by $100,000, so it's always 25% of that amount, which when it's calculated out is still, the down payment is often less than many of the other jumbo financing options that are available. This is also an easier program to qualify for. It's less restrictive as far as the underwriting requirements when compared to normal jumbo loans. There is no mortgage insurance, just like regular VA loans, and again, seller can pay allowable VA closing costs. And this program, of course, has secured fixed rate terms, just like the normal VA loan. We're going to talk a little bit about the VA funding fee. Okay, this is the Department of Veterans Affairs, or VA. They charge a one-time funding fee to most veterans who obtain a VA mortgage, and this is to help sustain the program. Only veterans really receiving VA disability are exempt from paying this fee. The funding fee is generally, it's a percentage of the principal loan amount that is due at the closing. The amount of the VA funding fee, it varies based on different parameters. For instance, the down payment, most importantly, and how many times the veteran has used their VA benefits. The funding fee is normally financed, or it's added in, rolled into the loan amount. It could be paid by cash too, but in most cases it's just rolled in or added to the veteran's loan amount. This is the latest VA funding fee chart. This is for VA purchase loans. Then there's a separate line item there for the VA cash out refinance loans, and then the interest rate reduction refinance loans, IRRRL, what that's commonly known as. In most cases, though, for a normal transaction, the veteran wants to purchase a home at 100% financing. When it's their first time using the program, their funding fee will be 2.15%. That is most cases with most veterans that use the program. You can see, though, if you put down 5% up to 9.99%, the funding fee goes down to 1.5%. And then, of course, if you put 10% down or more, the funding fee is reduced even more. There's a different line item there for Reserve or National Guard. And then you can also see subsequent use for veterans that have used the VA benefits before. They will have a increased funding fee for any subsequent use. For the cash out refinance transactions, again, most cases 2.15%, and then for the interest rate reduction loans, and we're going to talk about the refinance programs in just a second, but for the interest rate reduction loans, this program only requires half a percentage. For the VA interest rate reduction refinance, again referred to as the IRRRL, this is a program that is think of it as a streamlined refinance program that is available to veterans that currently have a VA mortgage. And this program is simply a tool to use to reduce the interest rate with minimal hassle. The program does not allow for any cash out for the borrower to cash out or pocket any money, and it does allow, though, all the closing costs to be included into the new loan. So the veteran can do a VA interest rate reduction refinance with no cash out of pocket, but they cannot receive cash if they do have equity in their home. They cannot receive cash back after closing. This program is good, again, because it is an easy way for veterans that have a higher interest rate, to easily reduce that, assuming interest rates are lower. They can reduce it with minimal hassle. Again, the homeowner cannot receive cash back. It's only to be used to lower the current interest rate or to refinance from, let's say, an adjustable rate to a fixed rate loan if they wanted to do that. The program does not require new appraisal. If your home value is upside down or underwater, you owe more on your house, on your loan than the home is worth, that's okay with this program. It does not require new appraisal or inspections or anything like that. The main requirement is that the mortgage payments must be on time, the previous mortgage payments for the last 12 months, and must be up to date at the time of refinance. Again, this program is a reduced paperwork, streamlined process, very, very quick and easy process for veterans that are eligible. All the normal standard VA requirements will apply regarding credit and things of that nature, which you can read more about on our main homepage there, vamortgagehub.com. Next, we'll look at the VA Cash Out Refinance. This is a separate program. Veterans that own a home and have significant equity in their home, they can cash out equity to be used maybe to pay off higher interest debt that they have, or maybe do a home renovations or some remodels around the home, or whatever they choose. This program will require a full appraisal to verify the value of the home. VA does permit up to 100% loan to value cash out. This program will require, just like the normal VA purchase program, it does require full income and asset documentation. Borrowers will need to qualify in regards to their income and assets, debt-to-income ratios, and things of that nature, just like they had to when they originally purchased the home. Same conditions apply. And again, it's a great tool to consolidate higher interest debt or pay for needed repairs maybe or renovations or remodels around the house. This program is not available, though, in the state of Texas. Home buyers that have questions, again, can reach out to us 7 days a week by visiting vamortgagehub.com or call 1-800-691-8826. Thank you for listening.